Hi everyone, this is Paul Lang from Disciplined Trading Strategies with another topic in a series of free online videos you can find at disciplinedtradingstrategies.com on the free stuff page. This topic is intended for newbies and discusses what to trade. There are pros and cons to them all. Ideally, this video should be watched in conjunction with time frames. It is also in the newbie section and you should find it right next to this video, whether you're on the DTS website or on YouTube. If you like this video, be sure to check out all of the other videos and free information on the DTS website on the free stuff page. Also be sure and attend an event that I do every 6 weeks approximately. It is the Introduction to Mastering Technical Analysis course that I offer to all members. Be sure you become a member of DTS. It's free. It requires nothing except your email, and you will get invites to all the great educational events. You will not get those if you're not a member, and you also get from time to time special educational emails as well as other great services. Do not rush into trading or investing for yourself, but when you're ready, get an education. There's no better place to do it than here at DTS with the DTS Seminar Program Package. You can find out about that on the website if you're interested. But for now, let's get on with the topic of this video, a summary of key instruments. These are the main things that you can trade or invest in as a trader or investor. I'm going to talk about three really. Stocks, also called equities, futures. I'm going to mostly discuss the concept of trading the stock market futures, the ES or the NQE mini futures, which are the E-mini futures for the NASDAQ 100 NQ or the S&P 500 ES. And I'm going to talk about Forex, which are the currency pairs. I'm going to mention when we're done other things and also options as a separate topic, but on this chart I want to compare these three. Here are the different things to consider when you're looking to trade one of these. The liquidity of the instrument, meaning how easy is it to get filled in your position, the hours that the instrument primarily trades, the variety that you have when you are trading the instrument, the account size needed, the margin you have, the key positive word or words about it, and the key negative word or words about it. Stocks, for example. The liquidity varies. There are a lot of stocks to choose from. There are a lot of very, very liquid stocks that can handle the needs of any account size that you have, basically. And as you increase the list of stocks, the liquidity will begin to shrink, but there are probably 2,000 stocks that you could trade on an overnight basis and at least a couple of hundred that offer great liquidity even for an active day trader. The hours of the stock market are 9:30 to 4 Eastern Time. Yes, there is pre and post market trading, but that only really applies to stocks that for some reason have reason to be trading. Otherwise, the liquidity is none or very small for the other stocks. So it's primarily 9:30 to 4. That's the prime time. The variety of stocks, this is the biggest advantage. The variety of stocks you can trade is huge. There's almost always something to do, a variety of strategies, a variety of times you can be trading, always something to do if you come prepared to the market. Account size needed. If you are day trading, there's a difference. If you are day trading, meaning that you're buying and selling a stock the same day, there is a 25K requirement, $25,000 minimum account size. This is set up by the SEC. It cannot be changed by your broker. If you are not day trading, if you're just buying stocks to hold overnight or for longer periods of time, you only need the account minimum set by your broker. Every broker is a little different, but with the competition these days, I've heard of brokers opening accounts for $500 even. Margin, if you're day trading, you'd have 4-to-1 margin, non-day trading 2-to-1. That means if you had a $20,000 account, it would be non-day trading. You'd be able to buy $40,000 worth of stocks to hold overnight. If you're day trading, you'd have to have, let's say, $30,000, and you would be able to buy $120,000 worth of stocks. And you could also immediately sell and repurchase those. There's no settlement time. You can simply jump right back in. The key thing about stocks, the best thing is the huge variety you have to trade, variety of strategies, variety of stocks themselves. You virtually always have something to do if you're prepared. The key negative is that if you're a day trader, you need the $25,000 as a minimum account size. In a couple of slides, I'm going to discuss an alternative if you want to day trade and you do not have that minimum. But let's move on for now. Next, the futures. Liquidity, very, very liquid. When you're trading the futures, you can trade virtually any size you want to, long or short, immediately in or out. That's a big plus. Hours, futures trade 24 hours a day. They do close down over the weekend, but they're trading continuously throughout that time. Naturally, even though they're trading 24 hours, there's kind of prime times where they're really moving and dead times when they're not. So even though they're trading 24 hours, it doesn't mean it's always the best time to trade during that entire time. The U.S. stock market is the primary market in the world, and the best time is during the U.S. market hours, but there are markets open when we're not, of course, and Europe opens about 5 hours before the U.S. market does. Prime time futures still U.S. market time 9:30 to 4. Variety, none. Probably the biggest negative is if you're trading the market, you're trading the market. You can trade the NASDAQ or the S&P or the Dow, but you're basically trading the market. Naturally, you can get into other futures for other types of things, but for most people trading the market, you're trading one thing, you're trading the market. If you don't like the setup, there's nothing else to do. Account size, just a broker minimum. Typically, you can start an account for a couple $1,000s, and that's enough to trade one futures contract. And one futures contract can move enough to make a decent amount trading one contract even. Margin, a lot. I don't know the exact ratio what it is, but you can control a very large position enough to make money even from one contract. Key positive, the liquidity and the leverage that you have, and the key negative, there's just no variety. If you don't like the setup that day, there's nothing you can do. Forex is trading currency pairs. Liquidity, just like futures, very, very liquid. And just like futures, trading 24 hours a day. What's different is that prime time of Forex by Forex traders is usually considered before the U.S. market opens, the wee hours of the morning in the U.S. Prime time is really when the European market is open. It's still good trading when the U.S. market is open, but prime time is really considered before that. So that can be an advantage or a disadvantage. If you're looking to trade something before your normal 8 to 5 job, Forex could be a perfect answer for you. Some people who trade like to trade the U.S. market when it opens, and they trade Forex before that. There's some variety. You're trading a handful of Forex pairs, so there is some variety there, so it's better than futures, but not nearly the same as the variety you have trading stocks. Account size is the same as futures as well, just a broker minimum, and you can control an awful lot of currency for a small amount of money. Very, very leveraged. Big advantages, liquidity, leverage, and off hours could be an advantage for you. The key negative, the minimal variety, and the key trading hours may be a disadvantage for you. It depends what you're looking for. Other things I will mention in just a minute what I mean by that. And for options, the reason it says depends there is because I need to explain options. People have a misunderstanding of options sometimes. Options are not really a different instrument. They are in that you trade an option, but you're not trading it in a vacuum. They are a derivative of something else. You play options on stocks or on the S&P 500 or on commodities or even on real estate, but you have to know where the underlying instrument is going, like the stock. You cannot trade the option in a vacuum. They simply change the reward to risk equation. For example, if you were bullish on BABA, you can buy the stock. You're buying the stock. If you want to play options, you can buy deep in the money calls, you can buy at the money calls, you can buy out of the money calls, you can sell puts, you can sell bull put spreads, you can buy bear call spreads, etc. There's an endless list of things you can do, but it all revolves around the fact that you feel BABA is moving higher. If it doesn't, you're going to have a more difficult time. Options allow for a wide variety of the ability to change the reward to risk on BABA moving up or not moving up. But all the option strategies require you to have an understanding of where the underlying equity is going. Even very sophisticated delta neutral strategies still benefit from knowing the underlying bias, and it's not likely that you're doing that. It usually requires sophisticated computer programs and larger amounts of money. Options can be great things, but they do not eliminate the need to trade something else first. I hope that makes sense. If not, you can always email me if you have any questions. About other things. The dumbest comment I ever heard. I'm not making money trading stocks, so I think I'll switch to Forex. I'll talk about that more in just a minute. But it's not actually the dumbest comment I ever heard. The dumbest comment is, I'm not making money trading stocks, but I heard Bitcoin is really hot right now. By other things, I'm talking about the Bitcoin craze and other things like that. Look, if you think Bitcoin is a great thing and going to be worth a lot of money someday, or any other hot thing that comes along, go ahead and buy some Bitcoin, put it away for 5 years, see what it looks like. But trading Bitcoin makes no sense. It's not going to be any different than anything else. If you think you have an underlying bias because you think Bitcoin is going higher, well, as a rule, the stock market goes higher. It doesn't change your bias there. Bitcoin or any other hot thing, people confuse a long-term investment with trading. If you want to trade something that has a real decent pattern. You cannot beat the stock market for trading. You can't beat futures for trading. You can't beat currency for trading. But there's no need to jump out and have to trade Bitcoin. There's plenty of volatility in the other securities I've discussed. Bitcoin and anything else that comes up like that does not give you any kind of edge. It's just one of those shiny metal objects that fish are attracted to. By the way, like anything else, it doesn't mean that you can't make money trading Bitcoin. I'm talking to the newbie group of people. If you're experienced at what you're doing and it's something you want to do, go try it. But this is not the place to be attracted to. Learn how to trade and trade and invest things that have reliable patterns. What to trade? What is this chart? Is it a stock? Is it futures? Is it a Forex pair? What is it? It's any of the above, it's all the above. All the charts look the same. Remember, there are legitimate reasons for trading different things. That's perfectly fine. However, learning to trade the charts is all the same. There is no difference. Not in the charts, not in the strategies. No matter what you're trading, the charts, the strategies remain the same. Yes, there are differences in that they may trade different hours. Things trade 24/7, and if they do, they don't have gaps because the market's not closed. And movements may be measured in dollars, points, or pips, but none of that matters in terms of how you're going to trade them to make money. Those are all small things that you'll become accustomed with when you trade any one of these different variety of instruments. But if you can trade one, you can trade any of them. If you can't trade one, you won't be magically able to trade another one, a very important point. And finally, I'd simply like to remind you, get a lot of great education for free on the DTS Free Stuff page. There's no catch. Simply visit the DTS website, click on Free Stuff, and you'll have a variety of Play of the Week videos. The prior events are recorded, and lots of other great topics that you can look up and find about trading and investing for yourself. Hope you enjoyed this video, What to Trade, one of a series of free educational videos on topics that matter to you. This is Paul for DTS, and good trading, everybody.